Hello traders, welcome to another daily analysis for the February 23rd Thursday analysis. Right now we are at 1:30 a.m. It's about an hour and a half into a London opening for Friday. So first thing, I apologize for lack of video for yesterday. I did write a daily analysis on my website, but I couldn't have time to make the video for that, so apologize for that. Yesterday was, again, today, February 23rd, was a quiet session without any tier 1 data again. So as I mentioned, this week it was usually very, very quiet because we didn't really have any catalyst to drive the market. So everything is most likely in a range bound, especially in the daily perspective, and it's really going to a sideways movement for a lot of currencies. So today the London session was very quiet. Again, there's no tier 1 data, and basically currency just followed through the sentiment, which actually is quite bearish for US dollar. Now, because it's a sentiment trade, so it's really, there's no fundamental reason for a bearish dollar. It's just, market is going to do whatever it is going to do at this point. In New York session, we do have the unemployment claims, which it comes out every week. That one was negative than previous and expected, but it's not a big deal because if you look at historically, it's still the labor market. It's still very resilient for US. And we also have the crude oil inventory came out today, and that number was much better than the previous expected. However, it is still notably a 7 consecutive weeks of build. So what happened to oil market right now is very interesting. Is you do have OPEC trying to cut the supply, but you also have the US shale producer try to pump up more. So these two, of course, going to hedge each other out. At the end of the day, OPEC does have a better influence, but this whole thing is really unstable because we all know this is the artificial major, and artificial major not only done by one country. It's like, if US decide to print more money, it's easier to be done because it's controlled by one entity. But now you have to have so many nations to work together for OPEC members. Really, it's very highly unlikely this thing can go on forever, especially have non-OPEC members such as US oil shale producers continue to pump up more oil, continue to basically work against OPEC. And we also have comment from Iran oil minister today saying that if the oil price going up above $50 per barrel, it's going to hurt the OPEC because the more higher the price go, the more oil the shale producer is going to produce. So that does make some sense. Actually, you do have to consider about that. So where is it gonna go? We don't know. We know that market expected to reach at least $60 per barrel. We also know a lot of hedge funds are buying the oil futures right now. Those things are certain, and we also know OPEC is going to continue the output curve until March, the end of March or April, and then which they might extend it. Those are the known fact. Now, because of that, it's still looking to go upside if you're looking at the current trend. However, how far is it gonna go? We don't know that. Now, on top of that, Canada this week does not have a good data. So of course, I wouldn't be too bullish about Canadian dollar for now because of all these elements. Asian session, we had the RBA government lowest spoke again. The content was nothing new, it was exactly the same content he gave out last week, basically saying that the Australian dollar it's good if it can go lower, but he couldn't say it's overvalued because if the commodity price continues to go higher, then the Australian dollar is most likely going to follow through. He also basically removed the further rate cut off the table. I do think his comment is quite hawkish. And although, yes, he did mention Australian dollar can go lower, but he also saying that it's not overvalued because the high commodity price. So it's really unlike the RBNZ where they're trying to talk down New Zealand dollar. RBA, on the contrary, did not do that. Now, the market had been quite bullish about Australian dollar all through this year. And as long as the commodity price keeps going up, which it did, I do think Australian dollar might keep going up even higher. Right now, basically, it is very high, but it doesn't look like there is some barrier ahead of it. So my current view for the currencies, for euro still follow more on the political sentiment with ups and down movement, but generally more leaning toward downside. The reason is because, fundamentally speaking, ECB continue to keep this QE program. We do have a lot of positive data, inflation, retail sale, GDP. This is all pretty good from the Eurozone members nations. However, as long as the central bank, ECB, decide to ignore all the positive data, as long as they say that we are going to keep the low rate market no matter what, then you are not going to see a euro that is going too high. On top of that, the current political situation is just very unstable. So as long as the political unstableness continues, plus the fundamental negativity from ECB, we will expect euro dollar to go even lower. For US dollar, really, we don't have any catalyst for this week, so it basically just drifted to the sideways, and you do see a little bit bearish movement, but I wouldn't take too much notice on that because really there's no momentum to drive US dollar. And a simple reason is that fundamentally it's still very strong, and that's why I'm still very bullish in terms of daily perspective. But sentimentally speaking, of course, you're going to have seller or buyer who just basically want to trade this currency. So really, there's no reason that I can explain the downside movement, but it's normal. That's a normal range of cycle for the market. And interesting thing is that when you read certain news and article, it's journalist's job to try to explain why certain currency or stock market reacts certain way. But to be honest, sometimes there's just no good explanation, and it is what it is. You have to understand the market is always going to go ups and down. It's never going to be a completely flat line. So I wouldn't try to explain it when there isn't really any catalyst, because if you read maybe Reuters or Bloomberg, people will say that US dollar has been sold off because the Fed minute is a little bit dovish. But if you read Wall Street Journal, it says that the Fed minute is a little bit hawkish. So it's really, it's like when we're doing technical analysis, if you don't see an oversold and overbought, then don't enter, right? Don't try to find the trade. The perfect setup should jump out in front of your eyes. You shouldn't try to so hard to find it, because if there's no trade, there's no trade. And I think the same thing applies to fundamental analysis. If there is no analysis, there's no analysis, basically. If there's no catalyst, there's no catalyst. And don't try to push something out of it. For British pound, it of course been benefited largely due to the weakness of euro and dollar. So British pound, as mentioned, is a neutral currency on our watch list right now, and it really just going to react to other currencies, especially the majors. So if you see a dollar weakness, you're most likely going to see a bullish strength into British pound. Another reason is that we don't really have any news coming out from Brexit, and the whole Brexit effect had also slowly faded out. So basically, the currency is really in a wait and see mode. For Canadian dollar, as mentioned already, the paradox of oil market continues, but I think the most negative sentiment or reason is because the fundamental data from Canada itself was not positive. So as I mentioned before, oil market is going to affect Canadian dollar for sure, but Canada itself has to function well in order to hype up its currency. And right now, we did have a positive GDP and labor market previously, but this week the retail sale was not only negative, it were a negative deviation. So really, it's not a good sign for Canada, especially the GDP also rely heavily on consumption. and that's something you need to take into consideration. So I wouldn't say it's bullish right now. You could still buy against weaker currencies such as Japanese yen, Swiss franc, but it's less certain on my watch list because of not only because the OPEC issues, but because the retail sale was just such a negative numbers. For Australia, on the other hand, Australian dollar is still very bullish. Now I know I said before that we do need to see a little bit fundamental data, but most likely next week the GDP will be positive. It might not be as good as the expected number, but I think it will definitely be better than the previous one. And the reason is because previous one was really very negative. It was contracted, minus 0.5%. So we are really looking to see at least a better number this next week. And you already saw a better trade balance. You already saw commodity price continue to go higher. So it's very likely the GDP data will be better next week. On top of that, I think RBA is really a strong backbone for currency, Australian currency right now, because the comment really is quite hawkish, that there's no further rate cut right now, and that they don't think the currency is overvalued because the commodity price should keep going higher. So that's really the main reason to drive Australian dollar. For New Zealand dollar, right now it's also going up, and the reason is because previously the downward momentum was mainly from RBNZ try to jaboing their own currencies. Now right now that sentiment had faded out, and once you remove that sentiment, then things revert back to the fundamental, which is even better than Australian dollar. So I do think New Zealand dollar should be better both than Australian dollar. That's what I thought. So once we don't have any more negative sentiment, then we should see New Zealand dollar revert back to its fundamental strength. For Japanese yen and Swiss franc, really both are negative currencies, but during these sessions, you will always see a little bit buying power into both currency, and that's just the way it is. You have a risk on sentiment, risk off sentiment, always going to benefit largely for these two currencies. Now, one thing you need to be aware is that if you have to buy one of these two currencies in terms of the risk of sentiment, I will definitely choose Japanese yen nowadays. And the reason is because the current risk of sentiment is mainly from the US political uncertainty from Donald Trump and also the Euro election. Now, since Switzerland is part of the Euro countries, not in the Euro members, but it's geographically within Euro, so it's not going to be the best place for people to hedge out their currencies. They would most likely even choose Japan because Japan is at least geographically outside the current Eurozone turmoil. So that's why when you have a risk of sentiment, you're pretty much going to see a better inflow into Japanese yen right now. Okay, so let's take a look at our currency. So first thing first, the things I did today is I got out of my Aussie dollar trade. Now, I got off the trade for a few simple reasons. First is that I don't think I just find that Australian dollar is really having so much momentum going on. And back then, I was very confident toward the US dollar fundamentally speaking, and I'm still am, but I think Australian dollar is not particularly weak in terms of versus US dollar. Like if I'm holding dollar yen or dollar Swiss franc, I'll be more confident to hold the trade. But because Aussie continue to outperform all other currencies, so that's why I think this is most likely the best case scenario is going to the sideways. And then if we have a negative GDP next week, it might tank this currency. But on the contrary, if we don't have a negative GDP, this thing will keep going higher. That's the reason I decide. That's the reason of my analysis. But I decided to get out for a very simple reason that I did not manage it well enough. So originally my risk management was a bit messed up. I got in with only about 50 pips stop loss. I basically, and I adjust to 100 pips, but I basically over leveraged this trade. So that was really my lousy management. And because of that, I just don't have any more confidence to hold this trade. And that's why when it came back to near 0.77 handle, I got out just to wrap it up before the weekend. And it doesn't mean that it will not go down. On the contrary, it might very well drop back to below 0.77 again. But for me, this is really the number one key when I manage my trade, is to understand what is my psychological feeling or analysis is. So for me, since I did not get into this trade with the right mindset to begin with, and for me right now, if to hold it, keep holding it when I didn't even have the right psychology behind it, it's just not going to do me well, especially when we are approaching the weekend. I definitely don't want hold something like that. So I got out with the original 1% loss and just wrap it up. And for me, lesson I learned definitely is that, don't over leverage and really follow your risk management. That's the number one thing, because no matter how certain you are toward a trade, you never know the outcome. In statistics speaking, your outcome is always 50-50, right? If you say you have 70-80% winning chance, that's in the long run. That's in a series of trades. It's not an individual trade, because each individual trade, you should only have 50-50% of chance. So that's why I got off this trade just to wrap up and be done with it, and then we'll see what happened. Now, of course, if you're looking at a chart, if you zoom out 4 hours, you just look at a chart, and there's a very clear uptrend. So it's for me to look at fundamentally, technically, and sentimentally. I just don't have any justification to keep holding a short Aussie dollar. A lot of people on the forum says that yes, it reached a new high, it's 20 months high, things like that. That's all true, but it's just not good enough for me to hold. I'm not going to short a trade when I know the fundamental side is against me, sentimental side is also against me, and I got in just simply because we are near a resistance, because the resistance can be very easy to be broken. Right? That's why we say resistance can become a support, and support can become a new resistance. Right? That's how this thing works. It's not a strong wall that's never going to be break. Right? On the contrary, it's just a reflection. So that's the only trade I did manage wise. I also did few small intraday trade, which just go with the flow, not really worthwhile to mention about. And my daily trade, let's take a look at it. Just give me 1 second. Okay, so right now, first thing first, let me zoom going down. Okay, so pound Aussie. So pound Aussie is the trade I already set to break even. And if you look at where we got in at this kangaroo tail, really we are really just right above this 1.6125, and looks like we are edging higher. And as I mentioned, because of the strength into British pound due to the weakness of US dollar and the euro dollar, so we might get stop out at break even, and that's just the way it is. I'm fine with it, and I'm still holding it just because I still believe we have a lot of good momentum for Australian dollar. But I don't know how this thing's gonna go. And originally we're hoping to reach 1.6, did not happen, and at least I know this is a risk-free trade for now. Dollar yen, on the other hand, we seem to be continue into this sort of downtrend movement. So again, this line is my stop loss, but I really hoping this few candle can at least hold it for now, right? And I hope we can really keep the upside movement. Now, fundamentally speaking, there's really no reason for me to get out of dollar yen, because dollar is just very strong fundamentally speaking. But as I mentioned, you never know how strong the sentiment is. So, you might get caught up once and twice, and that's just the way it is. And for me, I don't have any reason to get out, so I'm keep holding my dollar yen trade. Dollar Swiss, same thing, but way much better picture. As you can see, we have this nice uptrend, and like I say, the reason is because if you have a risk-off sentiment nowadays, the money will go into Japanese yen more than Swiss franc, and that's already reflect in the chart and price action. So dollar Swiss, of course, I'm keep holding it and really looking forward for it to go higher. CAD yen is my other trade. Now this one I'm actually maybe looking to get out, and the reason is because I'm just don't have that much confidence into Canadian dollar. I mean, it is still, of course, very good currency to buy against Japanese yen, but I don't know whether I'm gonna get out at break even or not, to be honest, because fundamentally speaking, it's very very strong for Canadian dollar, but I just don't think Canadian dollar does have. I just think it should have a better fundamental, and the retail sales is just really terrible this week. So I'm going to see what's going to happen next week, what kind of data we have. But generally speaking, you can still hold it. I mean, since it's a daily trade, you can still hold it. In the worst case scenario, it might go to a sideways movement. But as long as the oil market continue to be resilient, we should see a CAD yen edge higher. The next trade we have Euro Aussie. Euro Aussie, same thing. You do have this kind of reversal signal, and today you have a doji movement. Now, the general direction still goes to the downtrend, and that's why we are still holding this trade. We might have a large reversal, but fundamentally speaking, and even sentimentally speaking, it is going quite well in our direction. Aussie Swiss, same thing. I said you have this very nice uptrend, keep going up, so it's good. The only thing, Aussie yen, it's also good, but of course, like I said, Japanese yen is more resilient, so that's why you don't see as much movement as Aussie Swiss. And the next one we have is New Zealand Swiss. New Zealand Swiss is working out quite well. We got in second day. Today is a nice candle. I already moved my stop loss 10 pips below this candle, and the reason is because originally we say once we reach 73, we are going to move to break even. Now, I was hoping to see what happened today if we can break above 73. I'm really hoping to break above and close above. That will be very significant. But if we try to touch and fail again, I might just wrap it up, just because I don't know what's gonna happen. I didn't move to break even because break even is just too close. So for me, the daily range is just about 50-60 pips. So for me to move below it, it's plenty of room to go. And if I get stop out, I get stop out. But most likely, New Zealand dollar is quite strong right now. So I do hoping at least to close above 73. But if we fail to do that, then it's really, you penetrate so many times, never being able to close above. So if we do close above 73, that will be significant enough. However, if we fail to do that, that will show how strong 73 is. Euro New Zealand also works out very, very well. We got in with this bearish candle, a little bit, a huge, actually a nice reversal signal yesterday. And a lot of people ask me that, whether they should get out. And really, that's the thing I'm trying to tell you is if you get in the trade, fundamentally speaking, then you don't want to get out just because you have a reversal candlestick. So that's something you need to understand. That for me, I was fine with this candle. I don't really care even if we have a reversal today, because for me, I got in because first thing first is the level, right? I got in at the right zone. So for me, I'm willing to hold it. Of course, today it works out very well. It took out this low of the kangaroo tail, and now it does look like it's gonna go down further. New Zealand yen also is another our trade, and I got in because I do like this support zone. It doesn't work out as well as New Zealand Swiss. The reason is because Japanese yen is still very well supported, but because the strength of New Zealand dollar, I'm still holding it. And let's take a look at our other currency pair, see if we have anything. I do actually enter two trades today. Let me just show you right now. One is Aussie Newsy. I haven't got in yet, but Aussie Newsy, very, very interesting because you actually touch 1.0750, and this is a very strong resistance. If I zoom out, you can see that it's basically we haven't been able to close above since May last year. So we tried to go above, fail once, twice, three, four, five, 6 times already, and that's just technically it's a strong resistance. But fundamentally, of course, many of you know, I'm more bullish toward New Zealand dollar than Australian dollar, because the recent buying into Australian dollar, again, it's really based on the commodity price. It's really based on the sentiment. Then, unlike New Zealand dollar, there is a solid economic data to support it. So I do think these two currencies, if comparing with each other, Australian dollar might still be well supported, but I definitely will expect some sort of pullback to this 200-day moving average. So that's why I'm shorting it, just maybe to grab some pips at this 0.550 area. So I definitely will aiming to exit at this zone. Maybe not 0.575 precisely, but definitely between 0.550 to 0.6. That's something I will look into get out. And a simple reason is because I'm still very confident in terms of New Zealand dollar, basically. So that's what I'm looking for. Another thing I got in is New Zealand dollar. So I got in with New Zealand dollar. Of course, you have a strong bullish candlesticks, but also you have this nice double bottom, basically going up, down, nice double bottom. You are above 200-day moving average, and that's all just price action wise. But fundamentally speaking, New Zealand still has a higher yield than US dollar. It still enjoy a better political stableness than US dollar, and fundamentally speaking, it is still doing well. Now, US dollar, although I'm very bullish, but it does have this occasional weakness, sentimentally speaking, and because of those weakness, I do think New Zealand dollar might outperform US dollar. Now, since I'm already have a lot of dollar long trade, for me to have this New Zealand dollar trade will be a nice hedge as well. So that's why I'm looking forward to getting into this one. I don't have anything else, to be honest with you, but let me quickly go over it just for the purpose of teaching. We do have this bearish big shadow today for Euro Pound, but definitely, of course, not something I was short. You're right about this 200-day moving average. Euro Swiss, same thing. Euro dollar. Just give me 1 second, because I'm actually doing a sort of intraday monitoring right now. Just give me 1 second. I'm going to very quickly take a look at what happened. We are right into an hour prior to London Open. So let me take a look at a few of my session trade. I'm still looking to buy Australian dollar, basically Aussie New Zealand. It's still something I'm looking to play around in session perspective. Well, this is not bad, so I might get into this one. Just give me 1 second. I'm gonna enter this live. Again, this is not something I share just because it's not really a high conviction trade for me. It's just something I do in the session to session, and it's basically I just find out what's the sentiment that's most likely to be for the upcoming session, and just see if we have any technical signal to get into it. So I think this one does not get filled. Just give me 1 second. Here the end. That's the one I got in. This is Swiss. Dollar yen. Dollar Swiss. Dollar Swiss. I don't think. What's this? No, this I don't have anything here. Pound yen. Pound yen. Pound Swiss. Pound dollar. Okay. Euro Aussie. Looking to short. Euro New Zealand, I'm looking to short. Euro dollar, I'm also looking to short. Euro pound, also looking to short. Dollar yen, I think, if in the session you could buy and short both way. Same as cable. Cable is you can buy and short both way. But of course, sometimes I just follow with the trend. Okay, so let me get back to where I was daily wise. So I'm looking. Just give me 1 second. All right, so Euro pound, I was mentioned that not something I was short. Basically, yes, British pound does have a better strength than Euro dollar, but it's not. I don't think there's much movement, especially you are right above this 200-day moving average. So it's not something I would do. Euro Swiss also not something I would touch. Euro dollar, I'm always looking to short, especially in the daily perspective. But I don't have a signal right now. Euro Aussie, I already mentioned, that's the one we are in. Euro CAD, also looking to short, same as Euro New Zealand. Sorry about it. Euro New Zealand, which is also the one we are in, and finally Euro Yen. It's not something I would do. We do have this nice reversal signal, but it doesn't matter. I don't have any fundamental bias. Pound Swiss, you do have this nice reversal, a kangaroo tail. It does not work out. Cable, we're actually in cable right now. I mean personally myself, and I think I got in at 25. Stop loss is way above this 27 something. So got in for a very simple reason back then. It's like I'm still fundamentally more bearish for cable, and the reason is because I'm more bullish in US dollar than British pound. And I do think when we are approaching March, the Brexit is going to trigger another panic sale. That's what I think. I don't know if that's the case. Of course, you can never be too sure, but I think it will trigger another sale, another selling into it, and that might be a good chance for cable to drop. But it's a swing play, so I'm perfectly fine. It will take some strength for it to reach. It will take some strength for US dollar really weaken for it to push to my stop loss. Otherwise, I do expect the worst case scenario is just go to a sideways movement and then just drag out until March. So I'm fine with it. It's more like a swing position, more in a long-term perspective. Okay, so let's keep going. Pound Aussie is the one we are in. Pound CAD, not looking to long it. Pound New Zealand, also not looking to long it. We do have this kind of reversal signal today, but really not something I'm looking to buy, especially in the daily perspective. Swiss franc Japanese yen, also not something I'm looking to do. Dollar Swiss, already mentioned, the one we are in, same as dollar yen. Dollar CAD, on the other hand, it's also, for me, this is really just a sideways movement, up, down, really around this area. And as I mentioned, US dollar and CAD really don't have any fundamental bias for now. Aussie Swiss franc, the one we are in, just keep going higher. Aussie dollar, the one we were in, but we got out already. And if you're looking at, daily perspective, it just keeps aging higher. The only thing, if I'm a bull right now, the only thing I'm more concerned, of course, is that you are approaching this kind of high, right? But nevertheless, it's still way below, way above, way beyond my original stop loss. So for me, really no point to hold this intraday trade, and that's why I get out, especially when we are continue to age higher. Aussie CAD, it's coming out. Okay, so Aussie CAD again, it keep going higher and higher. Originally I did not get in with this big bullish candlestick because it's not right in a good zone, right? For me, doesn't have any space right below resistance, but it does look like it's just gonna age higher. So Australian dollar is really strong nowadays. Aussie New Zealand is the one we are in pending order right now. We might not get filled, and Aussie yen is also the one we are in. CAD Swiss, CAD yen. CAD yen is the one I'm a little bit doubtful right now due to lack of strength for Canadian dollar. I do think the fundamental bias is very strong enough, so might be able to hold it, to be honest with you. New Zealand Swiss is also the one we are in. New Zealand dollar, New Zealand CAD. Looking back, New Zealand CAD, we had two good signal right above a 200 moving average. Now we could have got it, to be honest with you, but the reason is because at that time I don't have the if we have this signal now, I will take this trade. But at that time, the Canadian dollar still is very strong fundamentally. You just had a nice labor market employment data. So at that time, New Zealand dollar still has more bearish sentiment. And right now, that bearish sentiment of New Zealand dollar has faded out. And meanwhile, Canadian dollar has a new bearish sentiment, which is the retail sale, the negative data. So that's why right now, if it happened now, I will definitely take it. But it seems like we missed it already, so I don't want to get in now. But New Zealand CAD, it does look that it might keep going higher. Now, New Zealand CAD is most likely in this kind of trendless direction. So really not something I particularly like to take because they both are really, no one is better than the other one. So basically that's what it is. And New Zealand is also the one we are in. But New Zealand CAD, now looking back on the other hand, it's because it just take off. I might maybe still able to get in if we put a pending order with this kangaroo tail. The reason is I just like the price area or the level of this trade. It just looks very nice to right above 200-day moving average, and the fundamental bias, it's also strong enough for New Zealand dollar versus Canadian dollar. New Zealand dollar still has a higher yield than Canadian dollar, and basically no further rate cut on the table, while in Canada it still has a possibility of a rate cut if the economy fails to pick up. So that's something to take into consideration. You might be able to get into this trade. Okay, so that's about it, guys. Let me see what we have for today. I don't think we have any tier 1 data. It's just everything's very quiet for this week. So we don't have any tier 1 data. We have a CPI for Canada later on. This actually might be a good momentum for me to either get out of my CAD yen trade or get in of my New Zealand CAD trade. So I will actually trade this data to see. Now the expected number is 0.3, which is better than the previous one. If we can have really a 0.3, then I'll be more and more confident to hold my CAD yen trade, and I will not get into a New Zealand CAD trade. If on the other hand, if we have a miss, then maybe New Zealand CAD trade would be a good one to get in. Or even if we have a positive one, New Zealand CAD trade is still good to get in. So I will probably just use this to get out of my CAD yen trade if we have a very negative data. and I can still trade an intraday trade. You could do it, but CAD, you can basically, if it's a positive, you can buy CAD yen, which I'm already in, and if it's a negative, then you can short, Aussie. You can buy Aussie CAD or New Zealand CAD as an intraday perspective, and just wrap up. It's Friday, you can wrap everything up prior to market close. So that's pretty much what we have for this week. I will do weekly analysis tomorrow for next week, but just to give you a quick preview, we don't have anything until Tuesday. You have a preliminary GDP. It is very important for US. It's very, very nice, tradable. And GDP for Australian, of course, this is a big event for Aussie. And also have manufacturing PMI. It's tradable, but not a big thing versus service PMI. And Bank of Canada expected to hold their rate, but honestly, you never know what they're gonna do nowadays. I do think they probably pretty much going to hold their rate. And then GDP again for Canada. Finally, service PMI. This is tradable for UK. It's very important. If we have a negative one, it will be very bearish for British pound. And Fed Chairman Yellen speaks. So again, not a lot of data, but definitely better than this week for next week. So that's pretty much it. I do have a member ask me question again. As I mentioned, guys, it's feel free to ask me question. I'm not the expert, so if I don't know anything, I will ask my mentors. So that's how we all learn from each other. So somebody asked me, what do I mean by basically what do I mean by fundamental bias? So that's a very good question, because whenever you hear me mention about fundamental bias, the one thing you have to understand is it's very important when you take any trade in currency. It's you have to have your own time frame. Now, whenever you hear traders discuss certain pair, you hear people say, "Oh yeah, dollar yen is gonna go up," and another trader might saying dollar yen is gonna go down. The things that they both are right, and the reason is because they both have different time frame. So I understand that time frame is the number one key for a trader, because that time frame will determine what is the bias that you have. So if you are doing a daily trade like I do, then my fundamental analysis become a larger, a micro scale. That means a single piece of negative data will not make me to enter or exit a trade. For me, I look at a consecutive of data. So if I'm looking at that's a US dollar, I say I want to buy it, but I want to make sure it has some fundamental strengths. If we have a negative employment data, I'm not going to just say, okay, dollar now it's a very bearish currency. No, because for me, it's a daily perspective. Now, if you're doing weekly trade, then you will even have a bigger perspective. If you're doing weekly trade, you can really just follow the central bank's analysis, because that's what central bank is doing. Whenever they say they are data driven, it doesn't mean they are going to change their policy over one single piece of data. So that's why when I say a certain fundamental bias, it really depends. First thing is what's my time frame. But since I'm doing most likely daily chart, so my fundamental bias, it's really depend on at least in a weekly base. So if I have a week of negative data from British pound, and the next week I have another negative data, then for me the bias is definitely looking to a negative side for British pound. But for me, if I have just one piece of negative data, that's not going to affect the currency. And that's another thing I say, that I definitely suggest people to go to tradingeconomist.com, because this website has the data from previous. So you don't want to just looking at a single piece of data and saying, oh, it's good or bad. What you want to do is compare. So if you look at US GDP, it's very nice when you have this kind of chart that you know where you are right now. So because if you trade in certain risk events, you could trade as an intraday perspective. But if you're doing daily chart, you really want to have sort of a benchmark. And this is a very nice website. It's free. You can really see, okay, where we are at, and immediately you can know that, okay, last quarter was really negative than the previous two quarters. So that was something that we need to watch out for. And the next GDP, which is next week, will be critical, because if next week the census is 2%, if we can go back to that, at least 2 something, then that'll be great. If we have falling lower than 1.9, that will be very negative for US dollar. So US dollar will change to the downside. So that's why, when you have one negative data, does not change your perspective. But if you have 2 negative data, that will change your perspective. So that's why I say fundamental bias. I give you an example. Yesterday, the capital expenditure from Australian was negative, right? Yesterday, so was private capital expenditure was very minus 2.1. A lot of people will look at this and set up their direction for a London session. So this is Asian session. So when they go into a London session, maybe in an hourly chart, they say that, okay, I am looking to sell Australian dollar versus, maybe they pick Japanese yen, maybe they pick Swiss franc, whatever they do, that will be their agenda. And if you ask them, they say because there's fundamental bias. And the thing is, they are right, because they are doing an intraday trade. So they only going to look at very short-term perspective, fundamentally speaking. So if they look at previous data released in the Asian session, they will use that to determine the direction of the next session. So that's why when I say there's no catalyst for Asian session or London session, it's very important, because a lot of hedge fund traders are looking at those things to determine the direction for the next session. So again, it's depends on your time frame. If your time frame is very short, it's just hourly in a session, then the previous data will be important and will determine about your fundamental bias. So a lot of people went to short Aussie yen during the previous London session because the negative data from the Asian session. And when you ask them why, they say because the fundamental bias, and that's definitely correct. So again, it really depends on the time frame that you choose to trade will determine on what is your fundamental bias. Second question, member asks, it's about the COT base. So I was mentioned about looking at the future market. Now, to be honest, I personally don't pay too much attention to it, but I do take a look at in a weekly perspective. And this kind of futures market only works when you have an extreme case. So when you have an extreme case, like when you see, Canadian dollar, you see this keep going higher, high, and then when you have this kind of consecutive high, and that does not match the fundamental data or does not match the technical chart, you can go to the future position to see if you have a divergence. So basically what we're trying to see is a divergence between a divergence where you have extreme high and extreme low. That's where you might have a reversal. Now, I would always pay attention to large speculators, because these are really a hedge fund and they are in to make money. So it's best if you go with them, from my personal view. Small speculator, they're also in to make money, but they generally make wrong decisions. So it's best if you don't go with them, you actually go against them. But that doesn't mean you follow it blindly. Really, this is just a guideline. Now, I tend to ignore the commercial trader. The commercial trader are not in to make money. Commercial traders are real business. So for them, they use futures market to hedge. So they don't really care if the price goes up and down. For them, it's like they want to, if they are a US dollar, if they are an importer, let's just say, and they trade in currency, they trade the goods for US dollar. Now for them, they always want to make sure the US dollar is high for them to make money. So they're probably going to buy US dollar regardless. So commercial traders are not real speculators. They are always going to go against whatever the price is. So if Canadian dollar goes higher, they are going to sell it. If it goes lower, they're going to buy it. So it doesn't matter what they're doing. For me, I really pay attention to large speculator and small speculator. And when I see a sort of extreme high or extreme low, that's where I'm very interested. And of course, this have to accompany by whatever happened fundamentally. And so, sorry, I might confuse some of you, but really I don't pay too much attention to it, honestly. And really just a nice thing to look at. But I personally don't pay too much attention to this kind of I don't use it to enter. Basically, I definitely have my fundamental reason, sentimental reason, a technical reason for entry. Then sometimes I will take a look at the futures market to see what's going on. It's just something nice to have on your back of your mind. Sometimes I don't even look at the chart. I read the news, Forex Live, and people will tell you which future position has changed for the week, and just have that on back of my mind. Right? For example, I say that the oil market future continued to go up. I don't really know where it was, but for me, just reading those news give me some sort of conviction. So that's what I use COT base for. You don't really need to. You can go to cftc.com just to see it, or you can just read some other things. And somebody else asked, how do you determine basically overbought and oversold? So the concept for me personally, the whole daily trade perspective is very simple. Is I have a fundamental bias, and then I go to a daily chart to find out an overbought and oversold area. So that comes to the question is, how do I know where it's overbought and oversold? The best way for me is just look at the bearish chart. So best way is really draw support and resistance on your own. So if you basically, you don't even need to go zoom out. You just need to, draw certain support and resistance. For example, 96.50 was the previous resistance. So if Newsy Cat goes here and give me a reversal signal, I would say this is a nice area, technically speaking, to short, because we are at the resistance, which is overbought area. But that overbought, oversold depend on the fundamental analysis. Another thing I use is moving average. I like to use 200-day exponential moving average just to give me a clear picture of where the general trend is. So for me, if I have anything that's above 200-day moving average, for me it's a nice indicator saying that overall price action is looking to the upside, and that's just something I'm used. You can use any other moving average you like. You can use 100, you can use 25, you can use 50. It's really depending on your own personal choice. Another thing people say, what about oscillators? What about MACD? What about RSI? You could definitely use those. There's nothing wrong with this. This is not something you have to understand. The tool itself has no power or meaning, right? This is not a holy grail, and I definitely fall into that back then. Feel like this indicator is the key. Indicator is not the key, because indicator basically just tells you the general direction, and they're just mathematic indicators, especially oscillators. So it's not something too miracle. If you use RSI, you use stochastic, it's not going to be too different, because they all going to tell you basically a general direction. So if you use MACD, if you use RSI, what you're trying to do is generally just looking for an overbought and oversold area, and I think they all works very well, to be honest. Now, people might ask, say, why do I use it? Very simple reason, just I don't like to have so much indicator on my chart. So I will tell you the rule of thumb is try not to have more than 4 indicators on your chart. And when I say 4, it including moving average, that including the trend line that you draw. So for me, it's like when you buy in a pizza, right? You order pizza and they give you choice of toppings that you can have. You can choose, maximum 3 or 4. So for me, that's the way I look at it. If you choose too much, the pizza becomes very, very distasteful. So for me, I don't want to have more than 4, because for me, when you have too much, it's just you're really information overload. What you're trying to do is just simply using simply using a price action chart to tell you certain direction. So I I think every indicator is wonderful, and there's no such thing as which one is better. But the rule of thumb is you just don't want to have too much. So you can use Bollinger Band too. You can use RSI. Definitely all works. I know I don't use it, but personally I know a lot of traders who use RSI or MACD, and it works wonderful for them. And again, I don't use it not because it doesn't work, it's just because I'm not used to use it basically. So if you use RSI, you know, where is it? Oh, I think it's just have to open it. Sorry. So RSI is here. So if you use RSI and MACD, basically you're really just looking for an overbought area. So maybe over 0.8, this area, and the MACD also goes higher. Maybe, you know, that's where you sort of tell yourself, okay, now we are at a higher place. And if we have, you know, this kind of reversal signal, you say, okay, now the technical chart tells me we are at a reversal area. But fundamentally, does it work? Then that's where you do your own analysis. So really, it's not something too complicated. You can use RSI, you can use MACD, you can use anything you like. For me personally, I don't use any of the oscillators. Actually, I'm sorry, I don't even know if I pronounce it right, but I don't use any of those. I tend to just use candlesticks. I tend to just use, you know, bare naked eyes just to see where the resistance support is. And I like to use the moving average just to be more clear, so I can see right away where we are at. So basically, that's what I like to use for my chart, especially for daily perspective, because daily I'm really focused more on the fundamental side. For intraday trades, you can see I use daily pivot, I use 100-day moving average, 25 moving average. That's what I use. And most important thing is the daily pivot, because when I go into hourly trade, if I'm trading the risk events, I'm really just looking to profit at the high and low of the pivot point. So for me, I'm really just looking to grab those pips, and the range is very important to tell me where it's gonna go. So if I'm looking to buy Aussie yen because of certain risk events, and now I look at here, for example, if we're here, if I want to buy Aussie yen and we are here, I don't want to get in anymore, because for me it's too high. For me, my profit will be here only, and then my risk will be here. This is a downside. So for me, it's just not a good. So for me, I use this basically to eliminate the trade, right? So that's what I do for intraday perspective. I do have a daily pivot. So as you can tell, in daily perspective, I also have a average true range, 50 days. So for me, I look at the range. For me, trading, it's about understand the money flows, where the money is gonna flow to. I understand the fundamental bias, and then understand the range. The range is very important because you always have to think about seller and buyer. Things can go high, but when it goes so high, who is left to buy? When it goes so low, who is left to sell? So range is very important, especially daily range, weekly range. It's because it just tells you basically, you know, do you have any more momentum to go? So that's why I like to use range for a lot of things, even for my stop loss. So I hope that answered your questions. If not, you know, feel free to ask me more. I'll be more than happy to answer you. Other than that, you know, I'll be back tomorrow with another daily analysis, and I'll see you tomorrow. Thanks for watching. Thanks. Bye bye.